Cryptocurrency, a term that has become synonymous with the future of finance. The very word evokes a sense of futuristic finance, a world where digital assets hold the promise of revolutionizing the way we think about money. It's a digital gold rush, a modern-day treasure hunt that promises untold riches to those who dare to venture into its uncharted waters. From Bitcoin's enigmatic birth in 2009, shrouded in mystery and intrigue, to the explosion of altcoins that followed, the cryptocurrency market has evolved at a breakneck pace. This rapid evolution has captivated investors worldwide, drawing in everyone from tech-savvy millennials to seasoned financial experts. But with such rapid growth comes a sense of unease. Is it too late to join the party? Have we missed the boat? Or is there still time to ride the crypto wave? The volatility of the market can feel like navigating a stormy sea, with fortunes rising and falling in the blink of an eye. This essay delves into the heart of this question, examining the intricate dance between risk and reward that defines cryptocurrency investment. We'll explore the potential for future growth, the technological advancements driving the market, and the regulatory challenges that lie ahead. By understanding these factors, we can better navigate the complex landscape of digital currencies. Join us as we unravel the allure and anxiety of cryptocurrency, and discover whether this digital frontier holds the key to financial freedom or peril. The journey is just beginning, and the future of finance is waiting to be explored. In 2008, a shadowy figure under the pseudonym Satoshi Nakamoto introduced Bitcoin to the world. This groundbreaking white paper laid the foundation for what would become the first decentralized digital currency. Bitcoin was designed to be a peer-to-peer electronic cash system, allowing online payments to be sent directly from one party to another without going through a financial institution. This revolutionary digital currency, operating on a decentralized blockchain, promised secure, transparent transactions free from government control. The blockchain technology behind Bitcoin ensured that every transaction was recorded on a public ledger, making it nearly impossible to alter or counterfeit. This innovation addressed the double spending problem and provided a level of security and trust that was previously unattainable in digital transactions. Bitcoin's success sparked a wave of innovation, giving birth to thousands of altcoins, each with unique features and functionalities. These alternative cryptocurrencies, or altcoins, sought to improve upon Bitcoin's limitations or to serve different purposes. Some focused on faster transaction speeds, while others aimed at providing greater privacy or more efficient consensus mechanisms. The diversity of altcoins has created a rich and varied ecosystem within the cryptocurrency market. Ethereum, with its smart contracts, opened up a world of decentralized applications. Launched in 2015 by Vitalik Buterin, Ethereum introduced the concept of programmable contracts that execute automatically when predefined conditions are met. This innovation enabled developers to build decentralized applications, or dApps, on the Ethereum blockchain, ranging from decentralized finance (DeFi) platforms to non-fungible tokens (NFTs) and beyond. Ethereum's versatility has made it a cornerstone of the crypto landscape. Stablecoins emerged, pegged to fiat currencies to mitigate volatility. These digital assets are designed to maintain a stable value by being backed by reserve assets like the US dollar or other fiat currencies. Stablecoins offer the benefits of cryptocurrency, such as fast and low-cost transactions, while providing the stability needed for everyday use. They have become an essential tool for traders and investors looking to hedge against the volatility of other cryptocurrencies. Today, the crypto market is a vibrant, albeit volatile, ecosystem. It encompasses a wide range of assets, from Bitcoin and altcoins to stablecoins and tokens representing real-world assets. The market is driven by innovation, speculation, and a growing acceptance of digital currencies in mainstream finance. Despite its volatility, the cryptocurrency market continues to attract investors, developers, and enthusiasts who believe in the transformative potential of blockchain technology and digital assets. The journey from Bitcoin's genesis to today's diverse crypto landscape is a testament to the relentless pursuit of financial innovation and the quest for a decentralized future. Cryptocurrency's most alluring feature, its potential for exponential growth, is also its Achilles heel. The market is notoriously volatile, prone to wild swings influenced by regulatory news, technological advancements, and even social media trends. Bitcoin, for instance, has experienced dizzying highs and gut-wrenching lows. This volatility can be both exhilarating and terrifying, offering the potential for significant gains but also the risk of substantial losses.
Experts are divided on the future of cryptocurrency. The debate is intense and opinions are polarized. Some see it as the future of finance, while others view it as a speculative bubble waiting to burst. The volatility and unpredictability of the market add fuel to this ongoing debate.
Some, like Tim Draper, a prominent venture capitalist, believe Bitcoin will reach astronomical heights, potentially transforming the financial landscape as we know it. Draper has been a vocal advocate for Bitcoin, predicting that it will exceed $250,000 per coin. His optimism is based on the increasing adoption of Bitcoin by major institutions and its potential to become a global currency, exceeding $250,000 per coin. Draper's predictions have garnered both support and skepticism, but he remains steadfast in his belief that Bitcoin's value will continue to rise as more people recognize its potential.
Others, like Nouriel Roubini, a Nobel laureate economist, remain skeptical. Roubini has been a vocal critic of cryptocurrencies, often highlighting their risks and potential for fraud. He argues that the market is driven by speculation rather than intrinsic value, predicting a crypto bubble burst that could have severe consequences for investors predicting a crypto bubble burst. Roubini's warnings serve as a cautionary tale for those who might be tempted to invest without fully understanding the risks involved.
The truth, as always, lies somewhere in between. While there are undeniable opportunities in the crypto market, there are also significant risks. Investors must weigh the potential rewards against the possible pitfalls. The market's rapid growth and innovation are exciting, but they also come with a level of uncertainty that cannot be ignored.
Navigating this uncertainty requires careful research, a long-term perspective, and a healthy dose of caution. Investors should stay informed about market trends, regulatory changes, and technological advancements. Diversifying investments and setting realistic expectations can also help mitigate risks. And a healthy dose of caution. It's essential to approach cryptocurrency investments with a clear strategy and an understanding of one's risk tolerance. By doing so, investors can better navigate the complexities of the crypto market.
Indeed, the journey through the crypto world is as thrilling as it is perilous. The potential for high returns is matched by the risk of significant losses. As the market evolves, new opportunities and challenges will emerge, making it crucial for investors to stay adaptable and informed. Only time will tell where it will lead. The future of cryptocurrency is uncertain, but one thing is clear: it will continue to be a topic of intense debate and interest. Whether it becomes a cornerstone of the global financial system or fades into obscurity, the impact of cryptocurrency on the world of finance is undeniable. Late to the party? Opportunities for new investors. While the early adopters may have reaped the greatest rewards, it's premature to declare the crypto game over. The market is still evolving, with new technologies and applications emerging constantly. Decentralized finance, non-fungible tokens, and the metaverse are just a few areas with immense growth potential. For discerning investors willing to embrace the volatility, opportunities abound. Due diligence, your compass in the crypto maze. Entering the crypto market requires more than just FOMO or fear of missing out. Thorough research is paramount. Understand the technology behind different cryptocurrencies, their use cases, and their underlying value propositions. Scrutinize the teams behind the projects, their track records, and their visions for the future. Knowledge is power, especially in the volatile world of crypto. Diversification. Don't put all your eggs in one digital basket. Just as with traditional investments, diversification is key in the crypto space. Spreading your investment across different cryptocurrencies mitigates risk. Consider allocating a portion of your portfolio to established players like Bitcoin and Ethereum, while reserving a smaller percentage for promising altcoins. This balanced approach helps weather market fluctuations. Risk management. Safeguarding your crypto investments. Cryptocurrency investments, by their very nature, are high risk. It's crucial to invest only what you can afford to lose. Implement robust security measures to protect your digital assets. Use hardware wallets for offline storage, enable two-factor authentication, and be wary of phishing scams. Remember, The responsibility for safeguarding your crypto lies squarely on your shoulders. The future of cryptocurrency, a crystal ball glimpse. Predicting the future of cryptocurrency is like gazing into a crystal ball, intriguing but inherently uncertain. Will governments embrace or stifle this decentralized revolution? Will institutional adoption propel crypto into the mainstream? Will quantum computing render current blockchain technology obsolete? Only time will tell. Conclusion: to invest or not to invest, that is the question. So is it too late to invest in cryptocurrency? The answer, as with most things in life, is nuanced. The crypto market is not for the faint of heart. It's a roller coaster ride of volatility, fraught with risks and rewards in equal measure. However, for those willing to embrace the uncertainty, conduct thorough research and invest responsibly, the crypto world still holds immense potential. Disclaimer: proceed with caution. The information provided in this essay is for general knowledge and informational purposes only, and does not constitute professional financial advice. Cryptocurrency investments are highly speculative and volatile. Always consult with a qualified financial advisor before making any investment decisions.